Hi, I'm Nodilo here with your Pathlight Insight. Well, after 3 years of staying out of the news, the focus again is on Greece and the potential debt default. In fact, this week alone, Greek banks were temporarily closed and they limited ATM withdrawals to only €60 per day. When you couple that with generally underwhelming global economic growth and the potential for a US Fed rate increase, macro issues are clearly driving markets, thus increasing volatility. However, we think that any substantial sell-off could provide an opportunity for longer-term and more patient investors, as we see the same attributes that got us to where markets are today still intact. These include ridiculously low global interest rates, a moderately growing and in our opinion still underappreciated global economy, a lack of investor participation in equity markets over the last 6 years, as well as pent-up demand by the consumer in both the US and Europe. You layer on top of those things an improving Europe and Japanese economy, and we think there are enough positives to shake off the risks that are likely to linger for the foreseeable future. The reason is relatively simple to us, is that we think this current Greek issue is very much in the camp like we've seen over the last 5 years, with macro issues which included a prior Greek default concern, a EU breakup, the US debt rating downgrade, the very much aligned fiscal cliff concerns, and even the Ebola scare were issues that came and went. We think Greece is going to come and go as well without having any contagion or overly permanent negative impact on markets. And if we're correct, then over the medium term, the path of least resistance in equity markets is likely to move higher. Thank you very much for your time, and please give us a call with any questions.